Hi, guys. This is Michael from Nomadic Insights. On today's episode, we're just going to talk very briefly about value investing and some of the tools I think are necessary to complete a value investor's toolkit. So, in securities analysis, Benjamin Graham outlines a number of techniques for investors to find a margin of safety in securities. He takes a very brass tacks approach to securities analysis and approaches securities analysis like insurance underwriting. So, what an underwriter does is they select the best risks and they think that risks will be profitable. Underwriting is more of an art than a science, despite significant advances in risk taking models and risk management as a science overall. What that means is an investor really is a broker. Well, really, an insurance underwriter is what I want to say, who is looking for risks or bets that will pay off. And I think options trading really reinforces this idea of value investor as underwriter. I am not referring to crazy options trading and different derivatives, but I am referring to pretty simple options as a good tool in the value investor's toolkit. And since I started trading covered calls and puts, I feel like my ability to understand and really implement my investing philosophy as a value investor has improved. So I just want to talk about how I found that experience freeing and why today. So first, what on earth is an option? An option is insurance that protects you from price fluctuation or price changes. So there's usually two main forms of options, calls and puts. Calls give you the right to sell something, to buy something at a certain price, and puts give you the right to sell something at price XYZ. So depending on your desire for insurance, they can protect you one way or another as a risk management tool. This really is important if you're investing because you don't want to lose any of your principal. So this idea of hedging or managing your risks, well, I love that. I'm all about risk management. It's to me, now that I'm using options, the idea of investing without options to hedge my portfolio is like free climbing, or rock climbing without a rope. I'm like, you can rock climb with a rope? I'll do that. That seems a lot less dangerous. So would you climb a mountain if you had no experience without a rope? The answer to that question is probably no. I like staying alive, so I like options. And that's really what they do. They allow you to kind of hook in and not really be subject to a lot of the fluctuations in the market. And they also allow for value investing to really work out. So let me explain what a covered call is. So a covered call is when you don't, so naked call is when you don't have any of the assets to actually back up the call. So you have a lot of downside risk. So when something's a covered bet, it means you can pay for it. So when I sold a covered call today on Old Republic International, I put up 100 shares as collateral and I took the premium for $50. So on my $2,000 investment and my 100 shares, I've made an additional, $50, and I'm also going to get the dividends on that call option. So what that means is I'm getting a conditional dividend from the covered call. That's really nice. That is really, really nice. And, I don't have anything at risk because I'm still going to make money because the price would appreciate to the point where I'm going to get a limited amount of appreciation plus the premium. I don't know what's not to love about that. I love covered calls. They're awesome. Now, I'm not going to have the same major gains I would have, but gee, consistent, predictable money in my pocket or wild fluctuations. Gee, I wonder what the stoic inside me is going to like. Predictable money or wild and crazy risk? I choose predictable money. I just like getting paid. And it really lets you have a new source of options. So, I can't get dividends every month, but I can sell options every week and get paid money, money, money. And that's nice. So option number 2 is what's called a covered put. And a covered put simply means that you have the ability to pay cash for a stock. So selling puts without the ability to pay for the put is pretty dumb. I mean, it's really dumb. I would never sell a naked put. Now, the reason that naked puts are dumb, it should be, I'm going to accept an unlimited amount of underwriting risk, and lose all of my money. Bad idea. Very, 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 very bad idea. The reason why a covered put makes sense is because you get the stock at a price you're willing to pay for it. If Apple is trading at $150 and I think the intrinsic real value is $140, if I offer a put to someone for $135 and the stock price falls, I get a profit if the stock goes up, but I don't overpay for it. And I still get a return on my money, and I get a chance to buy it at a value I think is acceptable. That's like the missing piece of the puzzle. Light bulb. And then value investing makes sense because you can really approach it like business. But value investing without hedging and without options is really dumb. It's really dumb. It makes no sense to me if you're just doing it with stocks. But once you add in, and by the way, in securities analysis, they don't mention, options and hedges. And it's not even really in the Intelligent Investor either. So that's pretty dumb. I'm like, hedging and risk management to hedge your portfolio and still make money. Oh, that is fantastic. And I'm like, I like that. I like insurance premiums. I like getting paid. But, just to round out this video and its title here, it's, why don't value investors use options more directly? And why aren't options taught as a tool of value investing? Why would you just engage in idle speculation and, lose money? Also, my new litmus test for a stock is I don't buy securities where I can't get a standardized option, because if there's nobody willing to hedge or speculate, it's probably garbage. That's why I think Humble Pay is garbage. So thanks so much, guys, for joining us. So general investment finance tips and tricks are on Tuesdays here at Nomadic Insights. And on Thursdays, we have due diligence videos. Next video is going to be on DigitalOcean, which is a very interesting IPO that's coming up and looks like a strong contender to AWS as well as Microsoft Azure. My personal opinion is that stock is going to be a money shot, man. That's going to be a money shot. I'm really trying to figure out how to get in on this IPO, so it's going to be very interesting while I'm at Merrill. But again, thanks so much for joining us. If you like talking about stoicism, investor skepticism, hit that subscribe button and join us for Skeptic Sunday. What are you waiting for? Thanks so much, guys. Stay awesome, stay skeptical, and spread the love of options for value investors. They're my new favorite thing, and it is fantastic.